On today's video, I've got 3 reasons why you should be buying the dip in the semiconductor industry. And if you're avoiding semis, I've got other ways to play this. And that is because we are in the midst of something very familiar from a technology standpoint. If you're an old man like me, you've seen this play out numerous times over your life. We've got a hardware, software, everywhere phase happening in technology. The hardware phase has happened many times across our lifetime. We had personal computers, we had the internet, we had cell phones, and now we are seeing it in the data center. The software phase is just getting going, and I'll give you specific examples of companies that have just more recently reported earnings talking about the software developments where they're literally talking up 1,000 customers. These are multi-billion-dollar companies talking about 1,000 customers. We're talking about a small sliver of the customers that will be signing up, and we're moving into an everywhere phase. We got hints of that this week, and we'll talk about how all of this adds up that you have to be buying the dip in the market. As a bonus, I will give you specific semiconductor stocks that are absolutely in a buying area, and we'll point them out from a technical perspective. What is going on, investors? Hopefully you guys are doing well out there. Welcome to the Semiconductor Show, where we recap the semiconductor industry every single weekend. Today is a special edition because we saw a massive drawdown in a lot of semiconductor stocks after Nvidia reported their earnings last week. I think it's creating a great buying opportunity in the semiconductor industry. It's also creating opportunities in the software and other markets as well. I believe these stocks will bounce back very quickly, and I'll show you from a technical perspective that technically they're setting up for a move much higher. Both popular ETFs are actually showing the same technical signal that some technical analysis technicians rely on very much. I'll show you what that means. I'll show you the exact move. I'll show you how this actually played out not that long ago. And so you will get all the information that you need on today's show. Now, first thing that you have to understand is what's going on with AI has happened in virtually every technology revolution that we've had here on Earth. There's always a hardware, software, everywhere phase to what is happening. And it's happened over the course of history, dating back to the personal computers. This is in the 1970s. The personal computer became very popular. Companies like IBM really took off from a valuation standpoint and a popularity standpoint, and it was a great investment, obviously. Then there was the internet, which really kind of coupled the personal computer, brought it into the home, brought it into the classroom. Software was developed for the personal computer by companies like Microsoft, Windows, Word, all that type of thing. And then came the cell phone, which also kind of shrunk down the personal computer, put it in everyone's pocket, coupled with the internet, coupled with applications and software. It really created a new revolution as it relates to computing. And now we are in the midst of a new era where we're talking about artificial intelligence. And this is all starting out in the data center. And that is where a lot of semiconductor companies will benefit, obviously. Now, many of these companies have already seen dramatic increases in their share prices, but I believe we're about to experience the next leg higher. That is because all the evidence that we have is there's just simply not enough hardware to continue to move on to the next stage of the development. That obviously is going to be software. We'll talk about that in a minute. We'll talk about some specific examples about how software is pushing the limits of the existing hardware. Sam Altman this week actually illustrated this in the fact that he says that they launched a new ChatGPT model called 4.5 and that it is, quote, ready, but actually it's not, because the bad news is it's a very giant and expensive model, and they really wanted to launch it to all of their users, or at least their paid users, at the same time. But they've been growing a lot, and they're actually out of GPUs. This was a stunning announcement, and that they would add tens of thousands of GPUs next week and roll it out to the plus tier, which is the paid tier over at ChatGPT at that time. Hundreds of thousands of GPUs are coming soon, but he was pretty sure that everyone would use every single one that they would rack up. Here's the high-level overview of this is GPT 4.5 is certainly not AGI. It's certainly not going to solve all of the world's problems. And I'm here to tell you that these tech companies will continue to throw more and more compute at these large language models until they either, one, solve all of the world's problems, all the diseases, solve the mysteries of the universe, or they realize that that is just simply not possible. As we sit here today on Sunday, March 2nd, that is still theoretically possible, that these computer systems can solve a lot of problems and answer a lot of questions that we still have as humans sitting here on Earth. And so these tech companies will continue to throw as much compute at this as possible. The other thing that we know is OpenAI is popular, but it's not being used by everywhere. We haven't even come close to the everywhere phase of AI. Just turbo geeks and Silicon Valley nerds are using these AI systems. Very few enterprise businesses are actually using that. I'll give you 2 examples of conference calls where executives basically said that. And so the fact that they're out of compute right now, just serving a small sliver of the market, shows you how much more compute is needed. And if you stay tuned, I'll point out several semiconductor companies and even ETFs, if you don't want to pick winners and losers, that are likely to set their sales and go much, much higher. We also know that the mega cap tech companies continue to raise money and continue to invest in the data center. Meta reportedly trying to raise $35 billion, led by funding by Apollo, in order to build more data centers. Elon Musk, XAI, is discussing raising $10 billion at a $75 billion valuation. This was a company that didn't even really exist about a year or so ago. And so you've seen massive growth here. In fact, the last time the company raised money, it was at a $51 billion valuation. Anytime you see this, and now I live very close to Silicon Valley, this is heating up the valley in a way that I just really haven't seen in a long time. It's heating up venture capital interest. It's heating up the entrepreneur spirit that kind of feeds in the valley. I think the good news is it's actually kind of spread out more throughout the United States. It's not just centered out in San Francisco, although that is still the epicenter of where all of this stuff is happening. But anytime you have this type of multiple expansion where you go from $51 billion just a couple of months ago to $75 billion, to companies like OpenAI rapidly expanding, you get venture capitalists just drooling to want to throw money at this. And that is exactly what's happening. So the more money that is being poured into it means the more compute power, because XAI is trying to raise this money to build data centers. Meta is trying to build this money not to hire people, but to build data centers. And Sam Altman confirmed this week that he doesn't need any more employees. He needs more GPUs. Now, Nvidia reported their earnings last week. Total revenue for the full year was $131 billion last year. It was $60 billion. Now, do I expect north of $100 billion of revenue increase for Nvidia this year? No, but you're almost assured to come north of $200 billion over the next 12 months for this company, probably meaningfully above that. Some of you might point out that there are those sanctions on the country of China, but when we dissect Nvidia's earnings, you have the country of Singapore going from $6.8 billion of GPUs last year up to $23 billion. Singapore is a tiny, tiny island nation where virtually no tech companies have a presence. In fact, Singapore represented 18% of the company's total revenues, and customers use Singapore as a centralized invoice, while our products are almost always shipped elsewhere. So what does that mean? These GPUs going into Singapore, guess where they end up? They end up in China. And so China's sales go from 10.3 up to $17 billion. Despite the export restrictions, a lot of these GPUs going into Singapore make their way into China. So you not only have the United States at a race for this, but you also have China as well. And again, you are likely to go well north of $200 billion worth of revenue for Nvidia. And this is just one of the semiconductor companies, obviously. Now, this will all play into what we call the software phase. In hindsight, these things kind of gel together. We think of, oh, the personal computer came, and then obviously Windows and all the software that we use today, but it actually rolled out in the stages. I would argue that it accelerates over time because you did look at the personal computer. It took several years, maybe even a decade, for very useful software to show up where this was useful to the common person in your home, in your library, in your classroom. Then the cell phone came, and very rapidly that scaled up with applications, even newer applications and new use cases, things like Uber and Netflix and all those types of applications. Those came onto the phone. This also brought in a new era of social media. Social media existed before the cell phone was in our pocket, but social media exploded due to the fact that the camera, the video, the phone, all of that was at our fingertips 24 hours a day, 7 days a week. The similar type of thing is happening with AI, although we're still in the very early stages. AI is not being used in classroom. Your grandma, your mom, your grandpa, your dad, probably not using AI to a large extent. And when I show you here, there's actually software companies that are just beginning to roll this out into the enterprise. Now, the other very exciting thing we're seeing from a software standpoint is that applications that just didn't exist just a couple of months ago are rocketing to the top of the charts of the App Store. Grok, more recently, released a standalone app. In fact, the standalone app already existed, but they released Grok 3, which came to a lot of fanfare and a lot of positive talk around it. That rocketed to the top of the productivity charts, moving past ChatGPT. A couple of weeks before that, you had DeepSeek rocket to the top of the App Store, despite being essentially a piece of Chinese spyware. It moved to the top of the charts of the App Store, and millions of people downloaded it and started to use it. This is just the beginning of this type of phase and this type of thing happening. This reminds me so much of the early days of the iPhone, where a new app would come out and it would rocket to popularity. Same thing with the internet. A new website or something would happen on the web. Somebody would launch a new website, something cool would happen on it, have a new cool functionality, the word would get out, and it would rocket up into popularity. And in the stock market, things would react very rapidly. This is all spurring other technology companies to do the exact same thing. Meta is planning to release their own standalone AI app because they are seeing what's happening here. These are becoming very, very popular, and these are rocketing to the top of the charts. Now, we also have enterprise software companies. Salesforce is one of them. I just read through their most recently quarterly revenue conference call, and they talked about how they have Agentforce rolling out. It's really only a quarter or two deep. They talked about just having thousands of customers for this type of thing. This is a multi-$100 billion company, and they're bragging about having thousands of customers. It's unbelievable because this software is still relatively new. Not that many companies are implementing it, but the ones that are implementing it are showcasing real results. They are able to interact with customers. They are able to save thousands and thousands of man hours and likely thousands or millions of dollars in salaries and those types of things. I just also read through the ServiceNow conference call. They also just more recently rolled out AI software. In fact, it was really just earlier this year. They also got on their conference call and were bragging about having 1,000 clients to this type of thing and how the growth is basically off the charts. This software phase, particularly as it relates to AI, is just beginning. We are just in the virgin snow, whatever analogy that you want to put on it. This is still the early days of this type of thing. I know ChatGPT is several years old at this point, but it's still primarily only being used by a small group of people. It is slowly going to move out into larger and larger universe. The greatest example is that ServiceNow said, hey, we're drinking our own champagne. Or in some cases, we could say, we're drinking our own Kool-Aid. They are implementing all of this AI services inside of their own business. A company like ServiceNow services tens of thousands of different companies and different touch points throughout all of their clients. And they say they implemented these AI agents and their AI software into their own business. And in just a couple of months, they saved 400,000 man hours that would have normally been something that a human would have had to do. They actually saved 400,000. And so you can take 400,000 and times it by $25 an hour, $40 an hour, $100 an hour, and you are seeing the types of cost savings all of these companies are going to start to benefit. And so this is what's coming. It's coming very quickly. This is going to be the story as we move through 2025. And we're slowly moving into an everywhere phase. I don't think this phase has begun, but we're getting there. Things like robotics and those types of things, those are probably still another year, maybe even 2 years away, but we will get there. And that'll be a very interesting moment. But we do have examples of how this technology is going to start touching your grandma, your uncle, your grandpa, your dad, those types of people that might be retired, that might not be tech geeks, that might just have a cell phone and use it very casually. Well, there are things like voice assistants like Alexa, which are now getting an upgrade. Amazon this week announced Alexa Plus is coming soon. They're actually going to give it free, we'll put that in air quotes, to Prime members, which a vast majority or a good percentage of affluent Americans have a Prime subscription, so they'll get access to that. If you don't have that, you'll pay $19.99 a month, which basically means you'll probably get a Prime subscription if you want this. This upgrades the existing Alexa devices and allows you to have conversation. It also is a little bit more proactive, where it knows what day of the week it is. It knows what you tend to eat on those days. It knows that maybe you need some tickets for an upcoming game. It knows that if you go to that event, you might need a babysitter. You might want to talk to your friends about it, those types of things. And so this is a significant upgrade, and this will get it into the living rooms, the kitchen countertops. I've been over at families, and I don't have an Alexa device, but I've been to families and friends, and they have these devices sitting in their kitchens, sitting in their living rooms. This is where the everywhere phase begins to take off. And then just more recently, in fact, breaking just before I recorded this video, Google's co-founder is also feeling the heat. He feels the urgency that I've talked about on today's video, that you have this hardware, you have a software, and you have this everywhere phase. This hardware, software, everywhere phase is playing out really, really fast. And smart people in Silicon Valley, they know this. What I am telling you is not something I cooked up into my imagination. This is what the smart founders in Silicon Valley, including the founder of Google, he knows this. And this is why just today, he is telling his employees over at Google that they need to turbocharge their effort. They need to start working 60 hours per week. They need to go into the office at least every weekday. I don't know how else he could say that other than you need to be in the office every day. You need to come in and be working 60 hours a week. He also said they need to stop building, quote, nanny products, trust their users more. They say that Google's AI products are overrun with filters and punts of various kinds. So he is pissed. He says here, and I quote, "It has been 2 years of the Gemini program and Google DeepMind. We have come a long way in that time and many efforts we should feel proud of." So he's building him up a little bit here, and then he's about to tear him down. At the same time, competition has accelerated immensely, and the final race to the AGI is afoot. I mean, this is as dire as I've ever seen a Google executive say things. He knows this is going to get out publicly as well. I think we have all the ingredients to win this race. So again, he's pumping them up a little bit, but he's saying, but we are going to have to turbocharge our efforts. You guys are working hard. Now you're going to have to work twice as hard. Because again, he sees the exact same thing that we're seeing as well in the AI race. Companies that literally didn't even exist months ago or barely had a shippable product months ago are overtaking the company on the app charts, which is absolutely extraordinary that companies like DeepSeek XAI are able to do that. Google is one of the world's greatest companies of all time. This is almost like Michael Jordan going to the NBA Finals P&Ls losing and looking really, really bad. Google is saying we need to get back in the gym. We need to work twice as hard. And if you're not willing to do that, you're probably going to get the boot. I understand you guys are watching things like CNBC. You're listening to graybeards on Wall Street. I am telling you, I am literally like in the earthquake zone of the Silicon Valley. I can feel the tension that is happening there. I can feel Sergey Brin's urgency here. This dude literally could be on a yacht, chilling, doing absolutely nothing. Instead, he's at the Google headquarters, which I have visited multiple times over the past 365 days. You feel the urgency. Every time I show up at Google's campus, there's more and more people there. There's more and more activity. I remember a year and a half ago, I would show up there and it was a ghost town. I was there just a month ago and it was like a Vegas casino. There was people all over the place. And so these things are being turbocharged. The fact that Sergey Brin got off his yacht, got off his luxury lifestyle, and he's in the office, not only trying to motivate the employees, but he's trying to motivate them in a major way. This is showing you the urgency of what is happening here. And so you as an investor need to take this very, very seriously. This is your moment. Think if you could go back to the personal computer age and invest in the companies that would benefit there, and the internet age. You would know exactly what to do. Imagine if you could go back to the launch of the iPhone and invest in those stages. Now, I had been an investor in both of those stages, not the birth of the personal computer, a little bit before my time, but the dawn of the internet was actually when I started investing. I first got my very first stock quotes in the newspaper that would be delivered every morning. I would run out and open up the finance section and check the share prices of Nike and AOL and those companies. So I got my early investment chops when the birth of the internet. I saw the explosion there. And then we saw the birth of the iPhone as well. And now we're seeing something that I think is even more extraordinary. The reason why it's more extraordinary is the money that these companies have to throw behind this. In the internet age, these companies were still upstarts. There wasn't tens of billions of dollars to throw at this. In the case of the iPhone, in my opinion, that was kind of a natural evolution from the PC screen to a smaller screen. Things had to be reconfigured. There were some businesses that had exponential growth. Uber is probably one of the quintessential examples. The AI age basically makes it an open playground where, again, you can have companies just rocket up into popularity. You have to act with urgency here. On the newsletter, I will send out a newsletter early tomorrow morning. We'll preview Broadcom's earnings. We'll get into the nitty gritty of these types of things. There'll be other things. You want to make sure that you're subscribed to, at the very least, the free newsletter. On the paid side, we will be alerting you of these things. Now, let's get to the technical segment because I want to show you something very, very interesting here. We have the SOXX ETF. If you don't want to pick winners and losers, an ETF could be your best case scenario. We are creating this pennant or flag formation over on the SOXX. You might have a keen eye and say, yeah, we've actually done this more recently before. We did this back in 2023. Very similar type of formation, not exact, but you do have a pennant formation here. And here's what traders, professional traders, when you have this type of setup, change this red line to an orange line so you can see it. Maybe a purple line is more appropriate. These pennant formations, what some technicians believe is that they will break to the upside, and they break to the upside the same leg as the flagpole. And I'll show you how almost perfectly to the dollar that played out. I'm going to show that to you again. We made a pennant formation off of the lows in 2022 to some highs in 2022. Very quick highs, very rapid rise in the semiconductor industry. Obviously, it relates to AI. You had a brief sell-off, created a pennant formation. You created this, what is called a flagpole, and then you created a new upside leg almost to the dollar. And that is what many believe in the technical analysis community will happen again. We'll take this flagpole and we'll put it here, and basically the price action goes off the chart. In the case of this, it'll probably take you north of $350 per share on the S. That is $150 upside. Now, will that materialize? Technical patterns are true until they don't. materialize. You could get a break lower here. I think that creates an even better buying opportunity because this purple line, this trend line, dates all the way back to the great financial crisis of 2008. It has held multiple times. You get a pullback into that area in the shorter term down into the 160s. I think you're buying there. I think in a lot of ways you have $40 to the downside, 100, 150 to the downside. So either way, I think you're taking a shot at these levels. The other ETF is the SMH ETF. It's set up in the exact same way. You created this pennant formation in 2022. You created a flagpole in that scenario, and then you bolted on the flagpole here. Same type of situation. People believe that you'll make a new leg higher, and notice that if you do make a new leg higher, it's really just a continuation of the uptrend, very similar to the SOXX that you've been in since 2009. If you break lower on this one, it triggers a very, very nice buying opportunity. In fact, you have $30 to $40 in downside with, again, I think north of $100 upside there. Nvidia, very much also in a buying opportunity. This one has consolidated sideways. It is now reaching a support level in the 115s, 120 range. There's rock bottom support down here at 95 to 100. If you do break through $95, we always will talk about the downside here. If you do break through 95, your next stop is considerably lower, down here at about $40 per share. But the valuation would just make no sense. It would be almost astronomically too good to be true down at those levels. Again, a company doing north of $200 billion worth of revenue. Those commitments almost are locked in stone at 70, 75% gross margins. If this stock traded at $40 per share, I'd hate to see what the valuation was. It would be painfully, painfully low. In fact, it would be so painful that you'd want to concentrate a large segment of your portfolio on this one. This one, I believe, is probably going to break higher. Once you get that break higher, break the previous highs of 150, the sky's the limit for that one. AMD is in a beautiful, we are talking about an absolute beautiful buying opportunity. I will show this to you. I'm going to snap on a fixed range volume profile on the sideways consolidation, and you can see where the buyers have stepped in on this one. It is just underneath the area of support that I have marked out here at 98, but the rock bottom is down here in the $80 range, $75 range. So you could have some further downward pressure in AMD. In the short term, just understand you are buying an absolute falling knife on this one. This is a very well-defined series of lower highs, lower lows, but fundamentally, we understand what is happening here. AMD is likely to benefit. Broadcom reports their earnings this week, complicates the situation just a little bit. Probably would wait to step in on this one after the Thursday earnings announcement. You are set up at a top of the range on this one, not an area where I'm super excited. You probably should already have exposure to Broadcom. If not, you might be able to open up a position there after this week. Now, Intel is in its own universe. The stock is not necessarily trading on the theme, the hardware, software, everywhere theme that I pointed out on today's show. Would argue that this stock is in a little bit different space. When you get down here in the $18, $19 range, it can create a buying opportunity. Shares have not been able to get above $28, largely because of fundamentals. You're going to consolidate on this one until some decisions are made, number one, on a CEO or potential sale. Now, Qualcomm getting very close to a buying opportunity. This one's not playing a direct role in AI, although it is part of handsets. I believe you'll have Internet of Things. I believe it'll have a play in robots. This one doesn't trade at a premium valuation. You are almost in a great buying opportunity here. It's an okay buying opportunity. I think you'll get better on this one. You get better opportunities in Qualcomm. You step in on that one. Taiwan Semi has now just more recently touched the middle of the channel. This one is very much close to a buying opportunity when you reach these middle of the channels. You guys probably know the drill right now. If you wanted 10 shares, this is an area where you might buy one. ASML. I've been accumulating shares of this one over the past several weeks. This one's beneath the middle of the channel. It's more or less touching the bottom of a channel, which has really been intact for about 20 years now. NXP Very similar to Qualcomm, doesn't play directly into the AI race. So this one's chopping around a little bit. I've played the pops and drops on this one. Just understand with NXP, it's not your traditional AI company. Here's ARM Holdings. We don't got a ton of price action on this one, so it's hard to understand if these trend lines are perfectly intact. So I'm going to delete them, and I'm going to show you something also very, very interesting. We'll snap on the fixed range volume profile, which basically tells us where in the heck are people buying ARM Holdings. You're going to see something unbelievable here. Look at this. I'm going to snap this on. Look where the vast majority of people have accumulated shares of ARM Holdings. It's literally right at the price that the shares are now. So the share price wicked through this level and then easily found support. I think you can step in and buy ARM Holdings. That looks absolutely sensational. SMCI also kind of in its own universe, traded obviously very poorly technically after it went through those kind of accounting issues. We did have a green box on this one. That consolidation area did prove to be a decent buying opportunity. I still think that's the area shares consolidate. It's going to be difficult to get above the $65 range. I went through Dell's financials. There's just a lot of competition in that space. There's going to be a lot of demand in the server space, but this is a much lower margin business. I would much rather play with the higher margin business. This to me is something that you have to buy and then you have to eventually sell. Many of these other companies might experience upside for a decade. Dell, like we talked about, also reported earnings, big leg down. Should have buying opportunities a little bit lower on that one, probably south of about $90. Micron memory maker. It's actually in a spot where I wouldn't blame anybody if you wanted to buy. It's not the best buying opportunity, but again, you might get some opportunities lower with this one. It's consolidated very hard in this range between 82 and 100. I mean, you've kind of been chopping in this range. You come down here to 83. It might be a trade opportunity. You buy it at 83, sell it at 100. That one's looking okay. Lam Research, light buying opportunity, and finally Applied Materials has actually pulled underneath a buying opportunity. Continue to move lower with Lam Research, could create some very good buying opportunities. Folks, that was the Semiconductor Show for Sunday, March 2nd. The urgency is on, guys. Google is turbocharging their efforts, asking employees to work 60 hours per week. That's the last thing any of these engineers want to do, but that is what they are going to be required to do. We are in the midst of a 3-stage rollout of AI. You have a hardware phase, you have a software phase, and you have an everywhere phase. It is very quickly emerging and very quickly converging, and I believe the software phase is going to play out much more rapidly in 2025, and that is going to release an everywhere phase where even more compute is needed. You should be buying the dip in the semiconductor industry. You should be positioning yourself in the software industry, and you should have an eye on robotics, as all of these things can be life-changing from an investment standpoint, very similar to all the previous phases of technology has been from a stock market perspective. Hopefully you guys enjoyed today's video. We'll be back again soon with more. Good luck with your investments.